financial aid is sort of the overall term that talks about, or that basically provides lots of different things to students, ideally, that you would qualify for some of those things. They could either be free money, such as grants and like either grants or scholarships, or they can be loans or work study. So those are kind of like the three main types of sources that you would sort of hopefully be able to have access to when applying to colleges and universities. So the sources that they come from are either the federal government, which we're going to talk about here tonight. Also, the state government may have programs. Well, actually, at this point, all of the states in the U.S. have some sort of program. I think at one point recently, there was one state holdout that wasn't offering anything, but at this point, you should be able to see that there is a state program in your state. Those are basically for you to either, let's say, I know someone on the call was from, let's say, Minnesota. I know I remember hearing that state earlier. Let's say Minnesota, you want to go to, the student wants to stay in Minnesota. That is typically how it works. Like you would receive a state grant to stay in your state, or possibly be able to take it out of state. It just depends on what state it is and what their programs are. But that is something that you might also qualify for. And so most of the states actually have a pretty easy way to apply now. So I'll go over that briefly when I get to the federal form a little bit. Also, the universities and schools that you're applying to typically will have need-based or merit-based grants and scholarships. So the need-based portion is typically quote unquote called grants, quote unquote, and the merit-based things are typically called scholarships. So, but essentially they're all free money. So we like those. The state funding is typically grants, but some of them also have some loan programs. So you might see one or the other there. And from the government, there's a variety. From the federal government, there's grants, work study, and loans. So as you can see here, there's a variety of things that are available from those three main entities. And then the last one here on this list is like getting outside, what we call outside scholarships or grants from an external source that might be local to you. So for example, I should say local or regional maybe. Honestly, the best place to kind of look for those would be right in your backyard. They are not, that fourth bullet there in that, in my source list here, is basically money that you wouldn't be applying through the college, or basically through the, the federal forms and everything tonight I'm going to be talking about. Those are really external grants and scholarships that you would kind of need to seek out on your own. So it's kind of like a separate, it's a separate thing, but it's definitely something you should make the effort to try to find.
Kat, what I've always found that people find a little confusing, honestly, is just the terminology, because merit scholarships, private scholarships are sometimes called merit scholarships, and then the colleges use the term merit scholarship. So I know you're trying to explain this right now, but there are, private scholarships that you might, and you and your student might try and research and apply to on your own, but those are outside of anything from the federal government, the state government, and directly from the colleges themselves.
Yes, exactly. So it's almost like you could kind of think of it as like bonus money. It's like extra money beyond what you're going to be applying for through the college and university and through the federal government through this, couple of forms I'm going to talk about tonight. So, and I'll touch a little bit more on that tonight, but I do want you to kind of leave the call later to knowing kind of what the sources are, and that there's a lot of stuff available. So it's not, again, I always say, don't count yourself out based on sticker price. If it's an expensive school, it doesn't matter. They may have very, very generous financial aid awarding availability for you. So don't don't give it up from the beginning. So, okay, so I'm going to move down to the next slide. So the eligibility requirements for financial aid, they do, so in order to receive a lot of types of financial aid, like from the federal government, the state, well, especially the federal and state, would be that you need to be a U.S. citizen or an eligible non-citizen. So unfortunately, if you are an undocumented, if you're a DACA student, you wouldn't be able to fill out the federal form for financial aid, but some colleges actually do have programs for students who are in that descriptor. So even though you wouldn't be applying on the federal form, you could still apply through the colleges for financial aid. So again, you have to be a U.S. citizen or an eligible non-citizen. You have to be in a degree or certificate program and complete high school. Once you kind of go along during your time at college, you do have to maintain what the Department of Education terms as satisfactory academic progress. And so eventually, like, you know, you wouldn't care about that right now because you're in high school, primarily on this call, but essentially in order to keep financial aid going, you do have to meet certain academic requirements during school. And they're very reasonably set. They're not, you know, like difficult parameters to meet. But the school wants to make sure that you are, you know, doing okay, basically, in order to keep persisting at that and therefore receiving financial aid from the federal government. And let's see, I have to hurry a little bit through some of these things, so I don't want to go through everything arduously, but let's see. The private scholarships and grants that we're going to talk about and that we talked about on that first slide that had like the fourth bullet down, like its own little, basically the program that you apply for, not through the school itself, they might have their own requirements. So let me give you an example. Maybe you got an outside scholarship from your local Walmart, or maybe the student is employed at a restaurant or at a local store in your town. And the people who own that business say, well, hey, we really want to support students. We want to give, you know, scholarships. They could be $250 or $500 or $1,000 maybe. It would be like, those are what I mean by local. So you would kind of be looking around within your own community to just ask, to say, hey, do you give any money towards college students? You know, my cat's going to college next year and we're looking to apply for some of these extra private scholarships that are out here. And you'll be surprised that eventually you will find those. You just kind of have to start a little bit early. Don't leave it till, you know, the summer before college starts. You would want to start ideally right now if you're a senior in high school, and if you're a junior in high school, right, you know, you could start now, or you could even start, I'd say definitely by the summer or fall of the senior year in high school. And that gives you plenty of time to be searching for some of these that are either local or maybe they're regional places, you know, maybe your church, or, I mean, don't laugh, but even like the Elks Club, we used to see places like that come through. There's tons of different outside scholarships out there, and you could end up getting like a couple $1,000s towards books by searching for those nice and early. So, okay, so I think I've kind of covered those sort of outside private scholarships and grants, and now I want to talk about the rest, the federal, the state, and the institutional money, which is going to add up to the more the meat and potatoes of what you would qualify for in terms of need-based aid. So you would need to complete what's called the free application for federal student aid, otherwise known as the FAFSA. So most colleges in the country will require the FAFSA. Most colleges in the US use the Title IV financial aid programs. And so in order to receive, that's just a fancy way of saying federal financial aid, okay? So you definitely would want to fill out the FAFSA, because that is really kind of your ticket to getting access to a bunch of things. And the bunch of things were the things that I've already talked about on that first slide with the first 3 bullets: federal, state, institutional money. You want to get your hands on whatever you can get. The FAFSA will be your starter. The second item is on this list is the CSS profile. So I told you I worked at the College Board for a number of years with the CSS profile specifically. It's essentially the CSS stands for College Scholarship Service, by the way, as a bit of trivia. It's kind of like a supplemental application that some colleges require. So not all colleges require it. In fact, only about well, there's
like
about
a little over like
400,
300, yeah, 300 to 400.
Yeah, it's about 300 colleges and about 100 scholarship organizations that use it to assess need. So so it's not all the colleges. There's thousands of colleges in the country, and most of them require the FAFSA. But the CSS profile, there's just sort of a group of other schools that need it to get additional information beyond that federal form. And so those schools typically are private colleges, but there are some state institutions on that list, not a lot, but essentially they tend to be like colleges that have a very large amount of their own money they want to give out, and they want to get as much data as they can in order to figure out the best way to spend that money. So they're not trying to penalize you, they're actually trying to help you to get to the bottom of things in terms of what is your financial situation really looking like? Because quite frankly, the FAFSA doesn't have a lot of information. It's pretty pared down now, and it's actually going to be simplified a little bit more in in the not too distant future. So the CSS profile gets them extra information. So okay, so when you fill out the FAFSA, at the end of that application, you can also scoot right over to the state application in most states. So for example, if you're from the state of New York, at the end of you filling out that FAFSA, pay attention, because when you're on that screen at the end, it's going to basically invite you to go over to the New York State TAP application, which is the tuition assistance grant that they offer in New York State. And I say New York, but honestly, I'm talking about all of you on the call, because at this point in time, 2021, the state applications are pretty much right after the FAFSA ends. There could be some exceptions out there, but it is kind of easy. It kind of just slides you right over to it. So make sure you pay attention at the end of the FAFSA that you can not miss that. Otherwise, you got to take other steps later to go back and figure that out. Okay, and then once you apply for financial aid, you will receive financial aid, what we call award offers, or essentially you're going to be notified, how much am I eligible for? And that's, after that is when you would figure out what your decisions are in terms of your family decision and the student's decision for sure, matching that up with their academic interests, their social interests, where do they want to go to college? It's not just financial, it's about academics and social fit and all of those good things. So you would make that decision kind of after you have all this stuff in front of you. The application process is not the same for all colleges. Everybody does it differently. So there is one core formula to figure out how much you're eligible for. But I will tell you, you're going to see something different at school A versus school B versus school C. It may be close, but it's never going to be exact. So just keep that in mind. So, all right.
Kat, can I just kind of butt in for 1 second? Because somebody asked a question, which, just because it's this time of year, and they were asking about early decision, early action, if those financial aid deadlines might potentially be different.
Yeah, for sure. So the application deadlines here's the scoop on the deadline. So if you are applying to, so you could be, let me say this again. Most students apply through what we call regular decision. That means that they're kind of like waiting, and they're going to apply in, after January 1st. They're really looking at probably a February, give or take, a February deadline from a college as to when they need to apply for financial aid. And similarly, the admissions application is kind of along that timeline. It's between January and May 1st is the typical timeline. However, there are different types of programs available to you, such as if you want to apply early decision to a school, that means that you're, just like it sounds, you're applying early. You're actually going to be receiving a decision from the school early as well. So that time frame is typically, usually the financial aid deadline is around November 1st or November 15th, give or take. Those are popular deadlines for early decision. And then the admissions decision application, is due around obviously early as well. And then typically you will receive a notification by, the end of December. So here's the deal on that though. Like if you apply early decision, you really need to be sure you want to go to that school because it's a binding agreement. So the college you're applying to early decision expects that you're not applying to a multitude of schools. That you're like, wow, I really wanted to go to Syracuse University. That's the only place I ever wanted to go. It's a perfect fit for everything. I'm only going to apply there. That would be an example of early decision. The second type of early program is called early action, which has a little bit more flexibility because essentially you are applying to not just one program, not just one college early, perhaps. You might have like 2 or 3 top choices that you're looking at, and you can apply early action to those schools. And again, they're notifying you earlier than their, quote unquote, regular decision, which would take place, as I said, somewhere between, the January to May timeframe is really regular decision. And then lastly, there is another type, and that's called rolling decision. Rolling decision is kind of like it sounds too. Essentially, you are the school. There are some schools out there that really just kind of like to keep this thing going all year round. So they will, whenever you apply, let's say you apply in December, they might let you know 2 weeks later if you're admitted, and then they'll let you know either then or maybe a week later about your financial aid eligibility. So there's some of those out there as well. So again, the majority are regular. The majority of people on this call are likely to be using regular decision timeframes between January and May. But if you are that person, that student who says, I really want to go to this school, then you are probably an early decision or early action candidate to, try something out early and just lock it in, You're probably wondering, does that give me an advantage for financial aid? The answer could be yes at some schools, but it could be no at others, to be honest with you. I think it just depends on the college. But certainly, if you think about it this way, if you are applying early decision or early action somewhere, what does that say about you? That says, wow, I really want to go here. And so the school sees that as, these people are committed. They really want to go here. And with early decision being a binding agreement, once you're accepted, they kind of assume you're going to enroll and go. So it's also, good for them as well. So they may or may not give you more money, but I'm saying like there probably are some schools that might, give a little extra for early decision, but I will tell you that not all do that. Some schools, like where I've worked in the past, we kind of treated students all the same in terms of how we would assess it in the early decision process versus regular decision. So you didn't necessarily get anything more, but you got a fair shot at all of it. So you could ask that question though of the financial aid offices at your schools that you're applying to, and they'll likely tell you. Debbie, anything else that popped out of that?
Not right now. I've been answering a lot of questions, but probably better for you to go further.
Okay, all right. Okay, so you can, basically October 1 is coming, so you will be able to start applying for the FAFSA and the CSS profile starting October 1st. So if you want to, if it's the senior year of the student senior year, go for it. You can start October 1st. Now you might be saying to yourself, well, why would I apply October 1st if the tax year isn't even over yet? How am I going to do that? So they've solved that problem a few years ago. Basically, the Department of Education and the College Board have solved the problem with that in terms of it uses older data. So it's actually looking at, for the fall of 2022, it's going to look at 2020 income data, and it'll look at current assets. So again, 2020 data for income, current assets. So that's what you're going to see on October 1st. If you want to apply that early, feel free. If you're applying early decision or early action, I would do that sooner than later, because your deadlines are going to be in probably November. But if your regular decision, really, you could wait if you wanted to, but it's 6 or half dozen. I mean, unless you're expecting your assets to go, up or down at some point. I mean, maybe you want to think about that, but otherwise.
Kat, yeah, that's a good question. And I know we're not going to get into the nitty gritty at all about the FAFSA, but it's a interesting question that somebody's asking. When you say current assets, what does that really mean?
Well, it's actually phrased that way on both applications, the FAFSA, and if you need to fill out the profile, it says it there too. It says, as of today, what are your cash savings and checking? As of today, what are your investments? What's your investment value minus your investment debt?
So it's literally the day that people are filling out the FAFSA. Yeah. So sometimes, depending if you've got a big payment that you need to do, you might want to wait until that payment is out of your account.
Well, I probably would, because I mean, here's the thing, like if you know that you just had damage to your house from like one of these hurricanes or some of the fires in the West or something like, I mean, if you know that like, okay, I have to shell out, 5 digits worth of assets here, over 10,000, something large, then honestly, think about it, that's not going to be available towards paying for college next year, because you have to pay for something large that might be related to your personal life and your home, or your maybe your car is dying and you need a new car. I mean, honestly, I don't mean to. I am completely on the up and up with the financial aid process. Obviously, compliance is like my number one thing. But I'm just saying, from your standpoint, if you really have something large coming that would not be available towards your ability to pay towards college next fall, you might want to just figure out when you're filing that FAFSA and make sure you're, But to be honest with you, most people don't have assets that are fluctuating like that all the time. So filing it today or filing October 1st versus, filing it January 1st really won't matter, because even if it's several thousand, I will tell you, the FAFSA breaks down, the formula breaks down your asset contribution so much that it's kind of fractional. So it isn't like if you have $5,000, they're going to automatically make me contribute $4,000. It doesn't work that way for parent assets. In fact, it's probably closer to, in the asset section of the form and the formula, it's probably closer to about 6% of your assets that are asked of you in the 1 year of college. So it's super broken down. It's not, I just don't want anybody panicking, thinking, oh my gosh, I got to go out and like buy all the stuff I said I was going to do this year. Because honestly, the assets are just so broken down heavily in the application that it's really fractionalized compared to income. More of the contribution comes from income than assets. I will say one thing about that, though, is if the student has assets, there is a large percentage that comes from the student's assets. So just keep that in mind. So if the student has a lot of assets in their name. You do have to report that, of course, but the FAFSA actually takes 25% of the student's assets towards that first, that 1 year, the year you're applying for in college. And the CSS profile actually takes a little bit of a higher percentage. So, but the parental assets, not so much. So I wouldn't really panic unless you have, as I described, some of those examples there. Does that help?
Yes.
Oh. Okay. Okay. I mean, this is good because this is, hopefully this is all helpful to people. We don't have to go line by line in here. If it triggers a question for you, let's just answer it. And then, everybody will learn something here. Okay, so when you file the FAFSA, you're going to get something called a student aid report. It's called a SAR. It's going to give you something on there called an expected family contribution, otherwise known as an EFC. It is really just an indicator of how much federal Pell Grant you might be eligible for. It's not going to be, so if, let's say your expected family contribution on there says that you can contribute $4,500, but then when you get your financial aid awards from schools, you're like, wow, I'm going to have to pay something different than the $4,500. Why is that? It's not an exact science. So it's essentially a guide. It's essentially a guide for colleges to figure out how much they can afford to give you in their own money, but also it's very, specific to like the federal programs and what you're eligible for in those terms with the federal stuff. So, but nonetheless, your student aid report will have an EFC on it, and so you can take a look at that as a guide. But just note that if you're filing the CSS profile, you don't actually receive an EFC on that form. You don't get a result like that. It doesn't give you that. You can print out or save a PDF of what you filed through the CSS profile, but it's not going to give you an EFC on there like the FAFSA does. Okay, in terms of timing also, you're going to start hearing, if you're applying regular decision, you're going to start hearing from schools probably no later than April 1st, but typically it's like March 1st or March 15th or somewhere in March that you would receive your financial aid notifications. And then if you applied early decision or early action or rolling admission, just go with what I said earlier, that your notifications will be obviously earlier. What we have here on the slide is the March, April is really regular decision. Okay, and let's see here. So I think let me just make sure we've covered these items. Okay, well, if you've never saved for college, you just need to fill out the forms and make sure that you know exactly what you're qualifying for. And if you don't apply, you won't get anything. So I say, go for it, apply, just to make sure, because at minimum, you're at least going to qualify for a federal direct student loan. So it would be something the student would take out. So at minimum, you would qualify for that. And also, if you're interested in taking out any federal parent loans, you do have to file the FAFSA. So they're gonna, it doesn't take that long to fill out the FAFSA. I think there's some misnomers about that. But unless you have maybe
oops. Okay, go ahead.
Unless you have like a large amount of real estate or investments or farms, the FAFSA really shouldn't take you more than maybe a half an hour, 45 minutes at tops maybe. The CSS profile will probably take you about 45 minutes to an hour and a half, depending on how much real estate do you have. It'll hold up to 9 properties. So if you have, a lot of real estate, it's going to take you longer than somebody who's just, like me, a wage earner. I don't have properties. Wage earners with assets that are, cash savings, checking, investments types, those shouldn't take you as long to fill out. But for those of you who own homes or businesses or farms or other real estate, the profile could take you a little longer. So you want to kind of have everything together when you get started. But please apply, because you just never know. And at a school like the 2 high-cost private schools that I worked at, we had a lot of financial aid available for families. And in some cases, it could be cheaper to go to a private college than even your state school, because of the availability of so much of their own institutional funding. If you have, you may find that. So I'm just, it's kind of worthwhile to check it out. There's other stuff available, like the AmeriCorps program, which is it's a type of financial aid. You could consider taking a gap year to the student to work and save up some money for college, although, just make sure you're sure about that. I think with the pandemic, some students took a gap year last year. I hope that by next fall, we don't feel like that's an absolute necessity for some, where, like it was last year. I think people were, everything was just such a scramble. But only do that if you're sure about that together as a family, maybe. And then certainly look into the possibility of taking out private loans through companies like us, or banks or credit unions or home equity loans. But keep careful what you borrow against on your home. What if you do need to fix your roof? You want to have something available in case you need to take out a home equity loan for something else, non-education related. So, okay, so let's keep going here. So student loan debt is, on average, this here is from NerdWallet, but also from the College Board, same thing. Like, there's a lot of data on this topic. Typically for a bachelor's degree, whether you're at a private or a public institution, the average overall national debt hovers between $28,000 and $30,000, which isn't too much of an investment if you think about it over the course of the student's lifetime, to invest in themselves and take out a student loan, which again would be like a federal direct loan is what they're called. And then beyond that, there's other types of loans which could have the student's name on it, and or the parents or other creditworthy people. But that's kind of the average for students who leave with a bachelor's degree. All right. I would also be careful to limit debt, so that typically we kind of say to people, if you're thinking that you're going to want to be an engineer versus, sadly, teachers, who unfortunately are underpaid in this country, I guess. Sometimes, if you look at the data on it, there's data to my comment there. But the student needs to make sure not to overborrow in order to attend that dream school. So when you're looking at a school, if you're going to end up with, $100,000 of debt, but your first year, the average, salary is only $30,000 a year, you're probably going to get in a little bit over your head with monthly payments of your debt. So we try to, this bullet here kind of guides you to, which was also from NerdWallet, which you can check out that website, is, taking out 10% of the student's projected, post-tax monthly income, but also maybe use as a guideline, don't take out more than maybe what your first salary might be within your field. That might also be a good way to kind of think about it. And then you won't get in over your head as the student trying to make do after they've graduated. So let's see. So also, how am I doing, Debbie? I know we're late, of course, just because of the technical difficulties, but I'm just going to keep going until you tell me to move along.
We still got a good crowd hanging on. I think you should still go, keep going, and I'm answering questions as you're talking.
Okay, perfect. Thank you. Okay, so let's see. I want to talk about the cost of attendance here a bit. The middle bullet here, the amount of financial aid is based on the cost of attendance minus that EFC I mentioned earlier. The EFC that comes from the FAFSA, but that number is, if you're applying at a CSS profile institution, their EFC will be calculated different. And so it'll be the cost minus the school's interpretation of an EFC, essentially. If you do receive outside scholarships, like I mentioned, let's say locally, you know, at your maybe your parent works at a company and they're offering a scholarship or something, it can sometimes lower your other financial aid because you do have to report it to the school. So if you say to your financial aid officer at XYZ school, okay, I have $1,500 of outside scholarships, they may lower your financial aid. However, you might say, well, Kat, why would I bother then? And the answer is sometimes they don't lower your financial aid if there's a gap. Like if they didn't, if they couldn't meet your need fully, there could be what we call a gap there. And they might just fill that gap up with whatever you've been able to get extra. So that's a great scenario. The other scenario that isn't too bad either is, let's say there is no gap. They've already met your need, but you've got loans in there or work study as possible, you know, financial aid things. It could help you lower those items. And that's a good thing because it's less loan money that you'd have to take and pay back, or it's less that you have to work while you're also, you know, trying to go to school. So it's either way you slice it, the private outside scholarships are a good thing to get. So don't shy away from getting it, even if you think something might get lowered if I get this. Well, it's only going to help you, trust me. So most schools in this country, by the way, cannot afford to meet 100% of your need. So there's a lot of schools that have a gap sitting there. So hopefully you're just really filling that up and you're not going to get you know, anything taken away from you in terms of like other free money. Schools don't like to do that. They want to encourage you to go get other outside scholarships. Okay, so let me move to the next one. So the cost of attendance really is, it's a federal definition for cost of attendance. So it's every college has to use something that has like all 5 of these components, these colorful components you see here at the bottom in the cost of attendance. Okay, so everything you see is included. Now it will be, you know, it'll be obviously different school to school, but their tuition and fees will be included, your room and board, which also means that if maybe you're not, you know, maybe eventually you don't want to live on campus, maybe you want to live off campus in an apartment with some roommates and try to lower your costs that way or something like that. But room and board can be on or off campus. So it would be, you know, whatever your decision is when you apply, they're going to ask you, you know, are you living at home with your parents or are you going to be on campus or off campus? And essentially they're going to cover your room and board costs by, which could be rent and groceries if you're off campus, or the room charge for the dorm, or and dining plans if you're on campus. Okay, so those are all included. And then books and supplies are required to be included, as well as transportation and personal expenses. So transportation will vary from school to school. They're required by the Department of Education to at least list like the bare minimum of being able to go home, travel home on average. It's like an average. It's not going to be specific to like Kat Delgrosso doing it and you doing it, but it's going to be an average that they use for their students based on probably some historical data and some other data they rely on to formulate that number. So, and then personal expenses would be things like, okay, what do you need to live on, you know, to live at school, you need certain things to cover yourself from a personal standpoint, like the basics. So all that stuff as an average gets put into the cost of attendance. So the tuition and fees, room and board are a little bit more of a, you know, sort of a direct fixed cost, things that they can easily come up with. The other things are a little bit squishy in terms of what they have to estimate. So they may not match you exactly, but they have to use some sort of an estimate. Okay, so, all right, so the EFC, now we've covered a lot of that, so I think I'll probably, the last bullet on here, the items in that list of 5 at the bottom affect the calculation of your EFC. Now this is something I didn't necessarily say before, so I want to make sure to cover that. The parents' ages. So what that means is essentially like the way that your assets are, the way that the parents' assets are affected in the calculation depends on the age of the older parent in the application. So they ask for birth dates in the FAFSA and the CSS profile, and that basically, well, actually, this is really just the FAFSA I'm talking about here with that EFC. They look at the age of the older parent because why would they do that? Because you're close, whoever the older parent is closer to retirement. Therefore, they need to protect the assets a little bit more. So that's why they ask, that's why that's taken into consideration. Income and assets of both the student and the parents, as well as the, both the student and the parents. The number of siblings that are in college. So this is not parents in college, this is siblings in college. And then lastly, the household size. So how many people are living under that roof? How many people are being supported by the parent or parents who are listed on the application itself? And so if there are 5 people in the household, that gets taken into consideration versus someone who has 3 in the household. The formula is a little bit different, obviously, depending on your family size. Okay, so I mentioned this before, cost minus EFC equals your need, and that will vary at one institution versus another, but it should be relatively close, except for, you know, unless the school doesn't have a lot of means to give out their own money, that's where you're going to see maybe some of the differences. And also if their cost is a lot lower, you're going to see some differences in terms of grants available to you. So, you know, again, don't pay attention only to the sticker price because the school may have lots of resources to give you. Okay, net price. Net price is the lingo that was kind of defined about 10 years ago, actually, by the Department of Education. They wanted to have each and every college to have what's called a net price calculator on their website. So somewhere on the college's websites that you're applying to, there's something called a net price calculator. And it's either usually it's in the admissions or the financial aid or both sections of the website. And so you can calculate, kind of get a ballpark idea of what you might qualify for. And what net price means is how much is it going to cost me in the free, like how much free money am I going to get? And I'll subtract that from the cost to see like, okay, what does that leave me with? Cost minus free money. Free money meaning scholarships and grants. Okay, so that's the definition of the net price. It doesn't include work, study, or loans. So keep in mind that if you use one of those calculators, the Department of Education told schools, well, you can include your loans and work study, but you as a family should know that student loans and work study also help you pay for college. So, you know, you can also kind of count that in yourself as all right, what are my other resources besides my income, you know, as the parents' income and assets, the students' income assets. I can also use student loans and work study to help me to get to college. So, but net price calculators are good for you to kind of maybe go try and see what you can come up with at the different schools that the student's looking at. Okay. So I'm sure a lot of this is going to be, some of it's going to be repetitive just because I've thrown in a lot of things here and there. So let me just eyeball this here. Oh, one thing that's important here in this list on when you should apply for financial aid. Yes, you can start October 1st and you have all the way until June 30th of 2023 to apply. So let's say if you're a senior in high school right now. So you apply for the FAFSA on October 1 or sometime between October 1, 2021, that's right now, all the way to spring of 2023 when the student is essentially at the tail end of their first year of college. Now, let me say this to you. Please do not wait to apply for financial aid anywhere near that time frame. You would actually have trouble getting into school because they want you to pay the bill, and if you need the financial aid to pay the bill, you definitely don't want to wait. So my recommendation is you really need to pay attention to the deadlines that are listed on the school's website or perhaps you have a conversation. Maybe if they're allowing in-person visits, you're doing that. If not, maybe you're doing some Zoom meetings with schools. But I would highly recommend maybe even making like a spreadsheet, or however you like to keep track of things. What are the deadlines at the schools? Because they could have different deadlines and you don't want to miss them, because what if they're strict about it? Like, you don't want to miss out on any financial aid. I do know some schools that are strict about the deadlines they receive for the FAFSA and the CSS profile, and then other schools that are way more lenient. So you just have to be careful. Don't miss the deadlines that they have.
Kat,
So,
I've even heard, and
yeah.
you know, that there are some schools that if you don't fill out financial aid the first year, that they may not actually process your financial aid at the school for like years after that. Of course, you always can fill out FAFSA for the federal and state money, but I did hear that at one school.
Okay, that could be. So let's say, for example, you won the lottery, okay? And you knew that, gosh, I'm not gonna, you know, even if it was just like enough to pay for first year of school for the student to go in the first year. Or maybe a grandparent passed away and left some money to the student or something. So let's say you know you're not going to qualify for the first year. You should still apply and fill out the FAFSA if you want any kind of the, you know, student loans or the whatever. But if you literally don't apply at all, and then the next year you're like, okay, well, or maybe you had a 529 plan and you were like, okay, I'm just going to spend all this 529 plan in the first year, and then we'll just deal with the second, third, and fourth years if you're going for a bachelor's. And honestly, I can't blame you for doing that because it makes sense. But there could be some schools that say, well, in your, you know, you didn't apply the first year, so that we're not going to give you any institutional grant funding. However, keep in mind that the schools, if they've accepted the student, they do want you to come. So if you've applied for admission and you're qualified from an admission standpoint, I would venture to say that most schools, unless they're super hard to get into, you know, where they're already like, they've got people knocking down their doors to get in, I think you'll probably find that schools are reasonable. So, I mean, honestly, none of us know what's going to happen from one year to the next. So I think it's a huge valid point, Debbie. And I would like to hope that not a lot of schools do that, and they're willing to help out. Here is another example of that, which may apply to you folks on the phone, some of you on the phone. What if you have, you only have the one student going to college this year, but then you've got like 2 or 3 going at the same time by the time that first year student gets out? There's an example of where you might have had enough money in year 1, but years 2, 3, and 4, you're really having a hard time with it because you got all these people in college. So that's a huge example. So it's all very reasonable. If you have something like that, the school will listen, I think 9 times out of 10. And if they have the money to give, they'll consider you. So I'm gonna leave it at a positive note on that one, that they're likely to be reasonable to some level. So, okay, I hope that helped. Okay.
So, Kat, yeah. I don't want to open up a can of worms, and we're already at like, you know, past an hour.
Yeah.
But
sure.
And again, this is not to go into detail, but let's just acknowledge, because people are asking about it, that there have been announcements that the FAFSA calculations are going to change. They're pushing out the dates. Maybe if you just, again, we're not going to go into detail, but maybe just kind of give like a high level summary for the people who just have never heard about what might be happening and when we think it might happen.
Okay, so there was a piece of legislation at the end of 2020 that really is like called the FAFSA Simplification Act. That's like the generic term for it. And it is supposed to change how a bunch of things actually related to the FAFSA form, as well as like how the federal Pell Grants are calculated for families. So yeah, there's a lot of stuff in the weeds on this topic, but I will say this, changes were supposed to all take place for the 23-24 year. So not the fall of 22. In other words, not the FAFSA we're about to start here on October 1st. It was going to be like next October 1st would be the first time that anybody needs to even care about it. And it would affect the 2023-24 year. So depending upon what year you are in high school there, for the student, just figure out where you're going to be in the fall of 23. Now they've pushed it a lot, not all, but they've pushed some of the items to 24-25. So it's like, okay, for somebody who's a senior in high school right now, you're talking like your junior year of college. So it's like, okay, by then, are they going to change it again? Where, I think suffice it to say, it's going to change the wording of the EFC. So the wording will not be called an expected family contribution. It's actually going to be called a student aid index. So that's going to be a bit of a change. So whatever I tell you today, if you're at some point down the line, you're going to say, hey, Kat told us that was an EFC. It's now an SAI. What does that mean? It's because they're changing the name of it, and they're changing the way that the Pell Grant is calculated a bit. So they are, yeah, I mean, some of it has to do with the minimum and maximum Pell Grants are going to be based on the number of parents in the household and family income as a percentage of the poverty level for household size. Again, this is for 24-25 here at the latest, I guess. And then also there's a variety of things there without getting too much in the weeds of how they're going to calculate minimum and maximum Pell Grant funding. And then that SAI, that wording change is going to be something you'll notice down the line. The other thing that is kind of large about the change is that the way the formula works today is that if you have more than one in college, it actually kind of divides your family contribution, if you will, in half at the bottom if you have two in college. So it's not going to do that anymore. But it is going to provide, so let's say the FAFSA says that you can contribute, $20,000, but you've got two in college. So it'll essentially divide by two and say $10,000 for student A, $10,000 for the other student B in your household who's gone to college. It all totals 20, but you still, you're getting it broken down on both sides there. They're not going to do that when this change comes, and it's going to be, it's not going to divide by two at the end in that example by the number in college. But what it will do, so they say, is that there's going to be other provisions that will kind of make up for other things within the formula itself. So it's not like it's cutting out this enormous thing without some other provisions that are happening within. So I'm hoping that's enough to kind of get you knowing about it, but I don't really think you need to know any more that's in the weeds. Just know, I guess you might want to ask, somewhere down the line when it gets to that point, how is this going to affect financial aid? If you've been receiving aid for a couple of years and then all of a sudden these changes are happening and you've got more than one in college, that might be something you worry about then.
Yeah, I mean,
but I'm sure schools they're going to be preparing you with the knowledge of what's happening later on, and they're not going to be out to. No one's going to be out to like hurt your ability to afford staying at that institution. They're going to obviously, not want to do that.
I mean, yes, I agree with Kat. My advice would be kind of tackle your understanding of how the current financial aid system works, because that is what we have to deal with this year. Kind of know that there might be changes on the horizon. And I think what, Kat, you just suggested is at some point, either during the application process or after your child gets accepted and they decide where to go, I would, bring it up to the college and the financial aid office and understand how they might be handling these changes that are coming down the line, because there's still a lot that needs to be worked out with what they exactly are and what how the colleges are going to react to some of these changes.
Yep. And I really wouldn't panic about it, because it needs to be fair. In the end, they're not trying to hurt families. This is not meant to hurt families. This is actually meant to simplify the application process overall. So truly, I can't imagine, nothing about this is meant to hurt families. I don't really think that's the intention at all. So.
So Kat, we've got two more actual slides, and I think they're probably worth just mentioning, because I actually have gotten some questions from people about, what if their income is significant, their income in 2021 is significantly different than 2020.
Absolutely, yes. Okay, so before I go there, let me say that the FAFSA is free, and the CSS profile is not. It will cost $25 to submit the CSS profile to your first school, and $16 for each additional institution. There are a lot of fee waivers available, so if you qualify, they'll give you a fee waiver, and usually it covers several schools. I can't remember now how many they're doing, but anyway, just suffice it to say, that's what you would have to pay at most, 25 plus 16 for each additional school, if they require the CSS profile. Okay, so special circumstances. So let's say you have, let's address the income question that Debbie just mentioned. Okay, so I already said that the data that it's pulling from, the tax year, is 2020. So if you're applying for the fall of 2022. So if that income was way different than what you're experiencing now, and when I say way different, let's just say your income's lower. It was lower in 2020. No, I'm sorry, it's lower now than it was in 2020 tax year. Then you're going to have a problem, because the institutions will be looking at kind of the wrong data, essentially. They're looking at old data, which is fine if you're not, if you're not in a different situation. If you're in the same situation, then it's fair. But if you've lost a job and still don't have one picked up, or you lost a job and you replace that job with a lower salary, then obviously you need to tell the financial aid offices at those schools, gee, the 2020 data was not indicative of what my ability to pay would be now, because I've taken a $20,000 pay cut, or whatever the dollar amount is. And they will work with you to do what's called an appeal, which would be essentially asking them to reconsider your application using the more current income level, which would be 2021. Once this tax year ends, they probably won't let you appeal until the tax year actually ends. That's sort of typical, because essentially you don't really know exactly where your year is going to end yet, especially if you're a business owner. If you're a business owner, I'm guessing they probably will want you to not, really appeal until after 2021 is over. If you're a wage earner, maybe, if you're applying early decision and you're a wage earner and specifically what your income is going to be at the end of December, that might be a little easier for them. But I will just say, talk to financial aid and let them know. They might have you write a letter. They might have you provide documentation. It depends on the school how much they ask for, but it's likely that's sort of the typical process. They would ask you for some sort of documentation about the changes. And it's very common. They're used to it. So definitely do that. If you've lost a job or changed your salary within the family, please don't let them use old data. That's not a good idea. The other thing would be, like, what if you lost your job last year and you had to withdraw from retirement to keep the lights on, and to pay for whatever, just all your regular bills or whatever, unfortunately, you had to do. That's also something that, your overall retirement has gone down, but really retirement savings is not actually part of the calculation. So it's not like they're seeing that you have a lower amount and therefore retirement savings isn't actually in the calculation. So if you had to pull money from retirement to pay for bills, they might be able to do an appeal for you based on having had that one-time occurrence as a provision to help you out as well. We used to do that a lot. I was working at Syracuse during the 2008 recession, so we were just inundated with appeals, rightfully so. It was just a hard time for people. So definitely that's an example. There's other things on this list. Elementary and secondary school tuition costs may or may not be taken into account by certain schools. There are some that will use it as a provision for trying to get you more financial aid, and other schools may not, because they may say, well, that's your decision to send them to a school where you have to pay. But sometimes it may not be your choice. It's just something that you have to do. It could be for some learning disability reasons, or for medical reasons, or geographical reasons, things like that. So, just tell your story and see if they'll do it. And the CSS profile actually allows for some of these things already. That is one of the things that the profile does help you out with, because all the stuff you see on this list is already on the CSS profile. They have a section at the end called special circumstances, and they give you up to 2,000 characters to write your story if you have something that's not really seen through the data. Maybe you're taking care of a grandparent who's they're not living with you, but maybe you're having to pay $1,000 a month or $2,000 a month to help them with their rent money, because they're on a fixed income or something. There's all kinds of things. So please just know that the profile allows you to put all this stuff down on that application. But if it's a school that doesn't use the CSS profile, you're going to have to write it some way, either an email or a letter, because the FAFSA doesn't ask for the information. So there's no way of the school knowing unless you tell them. Okay, so definitely do that, because that's the way to maximize your financial aid that you qualify for. And these are legitimate things. These are things that have altered your ability to pay for college. So don't be embarrassed about writing a letter or an email about it. Just do it. Yeah. Mm-hmm. So very common. They're used to it. So it's all good. I think is a lot of this repetitive, maybe, Debbie, some of the stuff. I don't know. I know we've got some of the reminders at the end of this for people that we've already covered.
Yeah, I mean, if you just want to pull up the next slide and see if there's anything that we haven't said, and I think we might close tonight, but I'll give you the chance to just look over this slide and see if there's anything that we want to add.
Yeah, before, I guess, on that previous slide, all these different appeal reasons or special circumstances, you might want to, before you kind of appeal, you've already put all the stuff on the profile, or you've already written a letter. If you might want to wait for all the financial aid award letters to come in so that you can kind of see and compare them back to back and understand, okay, what is my cost really going to be at college A, B, C, D, E, et cetera. So that way you can kind of sit down with it all and then start making your appeal letters and things like that if you need to, with the one caveat of the CSS profile allowing for that nice and early. The other thing on this slide I didn't mention is that most colleges, I think I'm sure, have I guess I shouldn't say most, but many would have monthly payment plans, or they might waive application fees to try to help you save money. The monthly payment program would be like, if you owe $5,000 for the whole year, they would split it up over, anywhere from 7 to 9 payments throughout the terms, whether they're semesters or quarter systems or trimesters. So, just spreading it out. That's something you could definitely ask for. But you'll be notified of that stuff when you're applying as well. Okay, and then, oh, the misconceptions, some of these I've said, but let me make sure. So, if you don't try, you just should try. I know I've said it like 10 times tonight, but, your misconception might be that we'll never qualify for anything. You'll at least qualify for the student loans, which I realize is not glamorous and pretty, but it's sometimes necessity for investing, in a 4-year bachelor's degree or whatever degree you're looking to achieve. Families also say, we make too much money. You really don't know, because the formulas, if you have more than one in college, if you have multiple people in the household, it's not just about the income and the assets. There's a lot of stuff that goes into the formula. So as I said earlier, the asset stuff gets taken out fractionally. The higher percentage of your contribution will come from income versus assets. So, all right, we don't make enough money. I can't apply to private college or university. It costs too much. Definitely, that's a misconception, because again, I've worked at a couple of those schools, and they're very generous with institutional dollars for need-based programs, as well as merit aid. Sometimes schools have merit scholarships. Sometimes they don't. So sometimes they only have need-based. So just keep that in mind too. I covered the last bullet already. Okay. And then, and so these are basically all those misconceptions that I just mentioned or have mentioned tonight. And so I just say, please, give it a try. And the worst that can happen is that you can't make it work financially. And that's why you have a few choices in the list, unless it's early decision. And early decision is binding, but if you can't afford to go, then I think they don't make it binding. Obviously, they figure you're going to have to figure out how to pay for it. So it's all part of the package deal on that.
So Kat, if you don't mind, I'm just going to summarize, because I've been seeing a lot of really interesting questions, and hopefully, guys, I tried to answer as many as I could as Kat was going through the slides and sharing her knowledge, and I didn't get to all the questions. So let me throw out a few ideas of what we'll do. First off, I will download what's happened in the chat, because I think there's been a lot of good conversation happening in the chat. We will write up, summarize these questions, provide answers to as many of them as possible, because some of them I can see kind of lump into categories. There's been some topics that we didn't touch on tonight, and which there's been a lot of interest in. So I will coordinate future sessions on them. And the big one that came up is divorced families. I completely understand that's kind of a huge topic, and was too much for tonight and kind of needs its own attention. So we will coordinate something related to families with of divorce. And I just, truly want to thank Kat and College Ave for their support in tonight, and for helping to educate families. And I am sure we will have more of these sessions. I hope people don't walk away feeling overwhelmed. There was a lot of information tonight. It was just to kind of start to get you in the mode. There is plenty of time to continue to learn, and we will have further sessions, whether it's a deep dive on the actual calculation behind the EFC, which we kind of, again, scratched the surface tonight. And I know there were a lot of questions about what, is this considered an asset, and, or, is my student works and his income, is that included? So there's a lot of questions related to that. And we will probably schedule an actual FAFSA walkthrough. So we've got time, we've got more things planned. This was just the start to kind of get you familiar with terminology, get you familiar with kind of the general concepts of what happens in financial aid, and a little bit to light the fire under people here that you do need to start to learn these things. And it's great that you were here tonight and you are learning, but it's important that you educate yourself, and we'll help you because understanding the system is really, your best way of navigating it as well as possible for you and your student. So that's all I have. Kat, thank you so much. Thank you, College Ave. I am sure you'll be seeing all of us again pretty soon. And a huge thank you to everybody who showed up tonight, and you kind of were very helpful in the initial technical problems we had, but we were able to solve them. Kat, we couldn't see your face, unfortunately, but thank you so much for all of your knowledge. And we'll do another session where we can see you face to face.
Okay, thank you, everybody. Appreciate it.
Okay, thank you, everybody. We'll see you soon.